All right, let's get right into it. So on November 6th, Collegium Pharmaceutical, that's ticker COOL, dropped their third quarter earnings. And let's just say the market's reaction was, well, it was huge. We're going to break down exactly what went down. I mean, right away, even before the opening bell, the stock just took off. By the time the market closed, shares were up a massive 13.4%. And get this, it was on more than 4 times the usual trading volume. So yeah, this wasn't just a little blip. This was a major statement. So you have to ask, right? What on earth was in that report to cause a rally like that? And maybe more importantly, what does this signal for the company's future? Well, that's exactly what we're going to unpack here. Okay, here's how we'll break it all down. We'll start with the quarter itself, a total blowout. Then we'll dig into the numbers and see how they beat the street. After that, we'll look inside the growth engine. Then we'll cover management's bullish outlook, and finally, we'll give you the next call, our take on what's to come. All right, section 1, the numbers. Look, this wasn't just a small beat. It was a complete blowout. I mean, on every single metric that Wall Street watches, Collegium didn't just clear the bar, they basically pole vaulted over it. Let's get into the specifics. So the big headline number, the one everyone looks at first, is adjusted earnings per share. The company came in at $2.25. The analysts, they were expecting $1.88. That's a huge surprise, almost 20% higher. And you know what? This is the fourth quarter in a row they've pulled this off. And this wasn't just some trick on the bottom line, The strength was everywhere. Revenue was more than 10% above what anyone expected, a record $209 million. And adjusted EBITDA, a really key measure of raw profitability, that also crushed estimates. It was, simply put, a clean sweep across the big three. Okay, so where is all this incredible performance coming from? The story here is really cool. It's this tale of two pillars. It's a classic strategy, actually, where you have two totally different parts of the business that just work together perfectly to create something really powerful. So on one hand, you've got Jornay PM. That's their ADHD drug. And it is the growth story. It's the engine. It's the future. Then, on the other hand, you have their pain portfolio. Now, a lot of people thought this was just a legacy business that would fade away. But nope. It's turned into this super durable, super profitable cash cow. And that cash cow is funding the entire growth story. And you can see the balance right here. The pain portfolio, that's the big chunk, right? Almost $168 million. It's the stable foundation. But the real buzz, the excitement, is coming from that smaller piece, Jornay PM. It's already at nearly $42 million for the quarter, and that's where all the growth is. So let's zoom in on Jornay PM, because this thing is just firing on all cylinders. Prescriptions are up 20% from last year. More doctors are writing scripts for it, up 22%. But here's the really crucial part. This isn't just growth for growth's sake. The company is actually making more money on each sale. See that gross to net number? It's improving. All that means is after all the rebates and discounts, they're keeping more of the cash. The engine is getting more efficient as it scales up. That, my friends, is what you call high-quality growth. And management knows it. They are not being quiet about this. The CEO, Vikram Karnani, he came right out on the earnings call and said, and I'm quoting here, Jornay PM is the fastest growing stimulant for ADHD in the entire market. I mean, wow, that is a seriously bold claim to make in a space this competitive. Okay, now let's talk about that so-called cash cow, the pain portfolio. This is the part of the story that's kind of shocking. For the third straight quarter, all 3 of their main pain brands actually grew year over year. I mean, this business was supposed to be slowly fading away. Instead, it's hitting record revenue. This unexpected strength, it's a massive piece of the puzzle. It's the stable foundation paying for everything else. Look, having one great quarter is nice, but what really, really gets Wall Street excited is when management tells you, hey, this isn't a fluke, it's gonna keep going. And that is exactly what happened here. Management raised the bar for the entire year. And they didn't just tweak the numbers a little bit. No, they made serious upward revisions across the board. They jacked up the guidance for total revenue, they bumped up the target for Jornay PM specifically, and they raised their forecast for adjusted EBITDA. When a management team does this, it's screaming confidence. They're telling you the business has some serious momentum. So, with all this cash pouring in, what are they doing with it? Well, they're using it to make the company financially bulletproof. In just this one quarter, they pulled in over $78 million in cash. They immediately used some of it to pay down debt, and now they're guiding to a net leverage of under 1 by the end of the year. All that means is their debt will be less than their annual earnings. That is an incredibly strong, healthy position to be in.
And being this strong financially, well, it gives you a ton of options. Management was super clear on the call about their priorities. Number one, they're on the hunt for acquisitions, other companies in the pain and central nervous system space. Number two, they've got the green light for a $150 million share buyback program. And number three, they're just going to keep paying down that debt. It's a smart, disciplined plan that's great for shareholders.
Okay, let's step back and put it all together. We've got the huge earnings beat, we've got the two pillars strategy working perfectly, and we've got management feeling super confident about the future. So what's our take? What are we looking for in the next call and beyond? Here's the thesis boiled down. Collegium is no longer just a pain company. They are successfully transforming into a diversified CNS growth story. You've got the star quarterback in Jornay PM, you've got this surprisingly tough-as-nails cash cow in the pain drugs, and you have a squeaky clean balance sheet. That gives them the firepower, the optionality to go out and buy more growth. Okay, and now for our outrageous but plausible idea. If you're really bullish on the story, one way to play it could be with long-dated call options. Now, why would you do that? Well, it gives you leverage. You could capture the continued momentum from Jornay PM, and you'd be positioned for potential pop if they announce a smart acquisition. And the best part? Your risk is defined. You can only lose what you pay for the options. It's a way to bet on the story getting even better without betting the farm. So when you add it all up, the monster quarter, the raised guidance, the flawless execution, and all that strategic flexibility, our rating here is a clear outperform. This company is firing on all cylinders, and the market is finally waking up to it. And that's our look at Collegium Pharmaceutical's incredible quarter. Thanks for joining us for this analysis, and as always, please remember this is for informational purposes only. This is not financial advice.